But let's shift focus and talk about the real estate space now. We have Mr. Irfan Razack, the CMD of Prestige Estates, joining in to talk to us. Hi, Mr. Razack. Good to see you in. We do understand that you've given quite a lot of guidance to the analyst community in the past week odd, where you're targeting around 60 to 100% operational scale-up over the next 3 to 4 years, and pre-sales of 5,750 to 6,000 crores in FY16 versus 5,000 crores in FY15. Can you tell us what the plan entails and where are these pre-sales coming from?
Yeah, good morning. Actually, the pre-sales, like pretty much like previous years, we have a strategy, a plan. We have a slew of launches that we have planned for in the coming quarters. And I think all these will add up to the numbers that we are looking for, because we've got some good launches that we plan to have in Chennai, in Kochi, as well as in Bangalore. Hyderabad also, we need to do a full-fledged launch for our 2 projects where the show units are getting built. So all in all, I believe that there's a lot of inventory that we will be generating, and this inventory will give us the sales. The market is also again quite robust. There is demand and there is offtake, and all this put together should make us reach that target which we have set for ourselves. Like in the previous year, the FY15 we closed at 5,000 crores sales, and going forward this 15% plus is just not a bland number, but I believe there is a strategy and we should reach that.
Morning, Mr. Razack. This 15% increase that you are expecting, 15 to 20% increase that you are expecting in FY16 itself, should we assume that is also the revenue growth, or would revenues do even better because of realizations?
See, revenue on one side is because we already have something like 8,000 crores worth of sales already done, which the revenue has not been recognized. Okay. Now this revenue will start getting recognized in the next few quarters. So hopefully I think we should do much better on the revenue growth itself, top line. And the number should be much more than that 15-20%, because we already have that much sales in the pocket.
Okay. So you did a revenue growth of 34% in FY15, Mr. Razack. How much more do you think you can scale it up in FY16?
See, we are looking at anywhere between 4,000 to 4,200 crores top line revenue recognition in this financial year. Okay. And I believe that's easily doable and can reach that.
Okay. We understand that you have other plans as well, some micro location entry in Bangalore, as well as buying out the stakes of your partners. Can you take us through give us some more color on this and how that might impact P&L and when?
See, now like we have a ready asset which is fully matured, which is yielding. It's a lease property which is in a SPV. One of our stakeholders, partners are planning to exit, and the intent is to buy that stake. It's of course it's on offer for everybody, and ultimately the idea is that we also pitch in, and at the right price, at the right terms, we also would be interested in picking that up. The moment we pick that up, what happens is it gives us that much more the overall rental yield that we are getting, that will get pumped up. The final idea is to create, since these assets have been created, increase the stake in that asset, and the idea would be to hold it and then at some point of time, opportune time, even do a REIT.
Okay. I don't think you're present in the Mumbai and Pune market as yet. Do you have plans of entering into those 2 markets, and if so, how, and what would be different in terms of Prestige Estates as opposed to the others?
No, we are looking at these 2 markets and looking at opportunities there. We've been also given some properties which are on offer. The only differentiator that we would like to bring in is the same type of work ethics that we are following in the markets that we are present in. And I believe that at the end of the day, it's delivery, it's the trust that the customers have, and we have to see that the trust is retained. And to that extent, I believe we should be able to be quite successful in these markets. Of course, we have to do it in a measured manner. We can't just jump into those markets without knowing the nuances of it. But the intent is there. Intent is very clear that now it's time for us to look at these markets.
When should we expect you to take your first financial step in Mumbai or Pune? And what will be the order? Pune first or Mumbai first?
It could be either or both together, and we are evaluating some proposals. Once my business development team is able to come up with something really concrete which we can really put pen to paper, and that's the time the financial commitment also happens. And that's the time where I believe that once you take that one step forward and start something, then one will lead to the other. But the opportunities are there and quite available at the moment.
Okay. Mr. Razack, just one final question from my side then. One of the criticisms with regards to, the operational guidance that you've provided for FY16, while it looks great and achievable, there might be even a risk in the next 3 to 4 years on your balance sheet and maybe your debt increasing on account of the capex that you have planned. What is your current debt and what are the plans in order to possibly fund the capex that you have, and what is the risk that we could see on your balance sheet in order for you to even achieve it?
See, now coming to debt, I believe we are in a comfortable debt equity ratio of about 0.45 to 0.7, 0.45 standalone and 0.75 as a consolidated debt. And if you compare it to our peers, we are much better off. But the idea is, at the end of the day, is to try and garner as much as positive cash flow as possible by selling more and more of our residential inventory and completing it. The end game should be to see that your reliance, there should be less reliance on debt. But if it is required at some point of time to get that additional growth, we will do it. But at the end of the day, whatever debt we have, also 60–70% of it is on a lease rental discounting model, where I really don't have to look for cash flows to either service the interest or pay back the debt.
Okay.
So in that model, really speaking, there's no stress on the balance sheet, though it shows the number is there. But I believe if you take out the lease rental discounting, the rest of it is for operations and for growth. Ideal scenario I would also like to have is in the company is, apart from the LRD, the rest of it not to have any debt at all. But that's a scenario that can happen, and if we really work towards it, it is possible.
Okay. All right, Mr. Razack, we leave it on that note. Thanks very much for joining in and talking to us. So that's Prestige Estates. That stock is down around 1.3% in today's trading session. The company is looking to enter the Mumbai and Pune markets. That's possibly the next step that they are contemplating.